Good morning, March 27, 2020, and it's a Friday. The Rockstar Traders Friday, guys. Today we're going to have some unbelievable opportunities. With that said, things are looking quite bearish this morning, so I'm glad we're reversed into puts before the markets closed yesterday, guys. So congratulations. I would suggest locking some gains at the open in the expectation of a bounce and then get back into puts one more time. So the fake death crosses that we're talking just a couple of videos ago, guys, they may actually turn real. I'm going to provide some evidence, a ton of evidence in a separate video, but I'm going to show you just a couple of things here real quick. So very bullish pattern is being created on the VIX pre-market as we speak. Oil is down equals the market is likely to continue lower from here after this 20% bounce higher. So only enter trades at key levels, guys. Buy puts on intraday bounces. We are still very much bearish on Lulu after the reported earnings. Didn't do quite a big of a drop yet, but that would be the one trade we're considering. Basically shorting on any bounce. Roku puts, RCL puts, CCL. Bowen, BKNG, basically oil stocks clearly going lower. Steer away from refineries because they actually make more money as oil prices go lower. So don't short like stocks like VLO, but overall pretty much short the rest of the oil sector. Now, strong correlation between oil futures and S&P. I was able to take a pretty good snapshot of this. So basically you can see oil drops, S&P drops. This correlation has been very substantial over the course of the last few weeks. We've done a separate video on that. You probably should go and review it to just bring all this stuff to memories. In that video, we pointed out that oil was going to go to 27, 28 low. We said, what if we're too conservative and it goes to 20? And so oil right now is at 22.43 pre-market, but definitely showing signs that it will test the 20s. And so the talk of the week next week could be the fact that oil is under 20 bucks. And if that does take place, then the market is going to move substantially lower at this point, considering the chart from the 1987 60-day after the time interval after the crash. Don't expect 3,000 point drops again. Expect the sideways trading tunnel predominantly to the downside from here going out next couple of weeks. Expect the markets to be shaky, but don't expect anything crazy like what we've just gone through in the last couple of weeks. So the idea for today, we are targeting a move 3 with an 11 formation, basically gap down, bounce. Bigger bounce intraday on the news that, okay, they finally made the deal on the stimulus package. Now, the worst thing that could take place is the market could just trend sideways today without, with basically intraday dips and bounces if they postpone that decision until after market hours. So we're expecting them to actually announce the decision before lunchtime. So before lunchtime, we're expecting this drop, pop. After the decision is made, clearly the market is going to have a bit of a bullish momentum going. After that, we expecting the stock market to reverse going into the last part of the trading session. So there's many reasons, actually more than 5. And again, I'm going to present those in a separate video, but we're observing loss of momentum pattern. So all of these reasons, guys, are reasons to turn bearish. That's why we sent you the alert yesterday, basically saying, hey, convert into puts. So loss of momentum pattern is one of that. Oil could clearly drop below 20 next week. That's another reason. Something that could be a major catalyst is the fact that if you study the 1918 Spanish influenza, the biggest wave, there were 3 waves of the influenza in 1919. The biggest and the most damaging wave of that virus actually was the second wave. So as most of the workers are going back to China to work, we could see the second wave of the virus. Now, the second wave of the virus is a virus that now at this point has mutated, and it's not going to be as easy to fight off or prevent as the first wave. So yes, I don't want to even think about it, but you guys should know about it, that the second wave of the virus in 1918 was much worse than the first wave. So we're going to see if that takes place, then this stimulus package that they just announced clearly is not going to be enough, because this could be dragging out instead of planned 30 days or 60 days, it could be dragging out up to 6 months. And if that's the case, then we're going to need more stimulus, and more stimulus. And there is a fine point where the market stops reacting to any kind of stimulus. So, but more on that in the later videos. Chart of the virus. cases looks like a Bitcoin chart in 2017 and shows no sign of stopping yet. In other words, we're nowhere near the 20K mark for the December of 2017 when Bitcoin was hitting this 20K level. So if we're to draw a comparison between Bitcoin and the current environment, the chart of the coronavirus cases and deaths and so on, we could compare it to a Bitcoin level of about 7,000. So we still got plenty more room to go on the chart of the virus cases. So VIX, again, it's above 50, 60 after the 20% market rally. This is not a healthy relationship. This is sort of a divergence. After a 20% pop in the markets, VIX should have been trading back to the 30s, 40s level, and it's still above 50, 60. So the psychological clock is reversing, presenting a good situation to actually buy puts because the premiums finally gone down just a little bit. So the def crosses on every chart, I'm going to show you a couple of charts here in just a second, guys. The def crosses are now positioned after this 20% rally as an ideal entry, give or take maybe 100 points on S&P, an ideal entry to play the downside. What we are likely to hear in the news over the course of the next 2 weeks is a potential Italian default. Nationwide and global number of bankruptcies is going to start increasing. Jobless claims at 3.28 million yesterday, guys, may pale in comparison to the 6 million that could be announced next Thursday. So basically, I got a lot of catalysts for the market to actually drop here. So real quick on the loss of the momentum. So basically, the market has gone up. And by the way, guys, we go into detail, in-depth, explaining the loss of momentum pattern in our charts divergences course. If you haven't taken that, make sure that you do so you can gain a better understanding of how to trade this and work this for your personal trading. So market is going up 20% within 5 days. Some stocks have doubled in 5 days. Okay, and yes, these are some of the stocks we told you to buy 5 days ago, which was like the Boeing calls and the RCL calls when they were trading at like, you know, $23, $24 on RCL. But the point is, when something doubles in 5 days, when the market is up 20% in 5 days, okay, this momentum is not sustainable. So that's the whole idea of the loss of momentum pattern. And clearly, I've just identified multiple catalysts for the reason, creating the reason why this momentum could be lost just as rapidly as it has gained momentum. So basically, the conclusion from this video, guys, we're turning from a bull, we're turning from buying the dips into a bear that is shorting the reaps or buying puts when markets bounces. So here's your bounce. As you can see, it perfectly coincides with this bearish def cross formation that's about to take place. So could we move? Could we basically visit a level of about 2650? Yes, you know, based off the bounce intraday, it could be coming. We can get a substantial bounce. But as long as oil is dropping, that bounce could be sustained, and we might have seen the top already taking place at this 2630 level. The market did go slightly higher after hours. And lost the momentum rather quickly. So that is actually telling us that short term, there are some signals pointing to the loss of momentum pattern could take place at any moment, meaning today or Monday, we could see the market to begin its reversal lower from here. Now, RCL, similar chart, right? The only difference, the def cross right here has already taken place. We go from 20 when we're sending the buy calls, all the way to 49. And when we got to the 42 level, we send out the alerts to buy puts. The stock so far at pre-market is about 36, 37 bucks. Congratulations if you took that trade. Boeing, right? Same thing. When Boeing was around 100, we kept selling, saying buy calls. Now it's at 180, guys. We suggested reversing it into puts when something doubles in just a couple of days. I mean, understand this. There were people that didn't want to buy the stock at 90. Okay, now they all of a sudden don't want to sell it at 180. I don't think so. Okay, people that were buying it at 90, okay, they just doubled the money. They want to get the hell out. Okay, because you got to leave the party while the party is good. You don't want to be the last one to leave the party. Okay, so that's the type of situation we've got with Boeing. Okay, now especially when you have specific pre-existing conditions overall in the markets, such as short-term strong bounce of 20% that we were able to accurately predict again before it happened based on the 13 markets move formula, guys. Now this situation of a persistent condition of a very sharp move higher within a very short amount of time, okay, that momentum could be reversed just as quickly. So where are we going beyond today, March 27th? Well, as you remember yesterday, if you're in a VIP program, I've talked to many guys basically saying, look, the response to what we know was going to be a horrible jobless claim number was going to be initial reaction lower, and then they were going to buy the dip. That's exactly what happened. Well, what we think is going to take place today, once the stimulus package is officially approved and voted on and everything is still done and delivered, what you're going to see is the exact opposite. So we're going to get a pop and then it's going to be reversed. Now, this stimulus deal, we've been waiting on it for about 2 weeks. The rally of 20% higher was in the expectation of that actually taking place. So now that it is going to take place, you can see the markets unwind and reverse lower from here. So now notice that there is a small probability that we could actually go slightly higher and finish higher just to reverse that move lower on Monday. So this move, this pop that we're referring to, could either take place immediately today, which if you're in the alerts program, you know, because we'll send you the message as soon as we're observing that. Now, it could take place over a 48-hour time frame, in which if you were to combine the charts, like if you were to look at a 2-day, 2-minute chart and combine Friday action today, the market's fixing to open here in about half an hour. And if we are combining the action is going to take place today on Friday, and the action is going to take place on Monday, it could look like this on a 2-day, 2-minute chart. So be mindful. Don't all of a sudden put huge position, but do plan for this sort of reversal to begin shaping and taking place. So next week, okay, so what's about to happen is next week, we're going to see the market shift their focus from the 2.2 trillion stimulus package that's taking place today to actually focusing on what's going to be taking place next week. And clearly, there is going to be talks about the delay effect of this stimulus package. In other words, the checks are not going out today. They're not even going out next week. And by the time they actually get in the hands of the actual people, by the time this actually starts carrying the positive impact, we could be a couple of months away from that taking place. So the focus is going to shift to what happens now, what happens this week, what happens next week, and unfortunately, there's not going to be a whole lot of stuff that's going to be on the positive side, unless we can get an odd situation where they actually develop a cure, a vaccine, or something that really is proven to slow down the virus substantially. Now, the talk of the week next week, we're expecting to be oil prices collapsing. Second wave of virus hits China. Certain banks are going out of business. Companies filing for bankruptcies. ATM machines out of cash. Yes, it would be a good idea to go and get some cash out. Lulu still remains one of the best trades for the day. So far, the response to Lulu earnings, which actually had a good earnings announcement, beat both on earnings per share and sales numbers, completely refused to give any guidance, just like the trend with pretty much every company that's announcing earnings. You know, they are reopening pretty much all their stores in China. Again, investors may get excited and they may actually bounce the stock here, which is going to present a great opportunity. Clearly, there is the loss of momentum pattern here. We're heading into this death cross formation, which could result actually over the next 72 hours. We could see the blue line cross the orange line here. Guys, there's a lot of reasons to be bearish here. Any positivity could be wiped out of this stock really, really rapidly. This thing could trade down to 150 within 7 days. It could trade down to 170 today. The trading tunnel remains the same, guys. The market is fighting pre-market with this 25.41 level. Okay, crucial level. If we break that, and we're likely to break that at some point intraday, if oil continues to drop, the next level we're targeting is 23.50. If we break that, we're heading to 21.75. We've talked a lot about that in the video yesterday. Now, understanding that the market is not going to do any 3,000 point drops is crucial when you select your strike targets. This is why we keep inserting this 1987 chart after the crash in October 1987. As you can see, bounce, drop, bounce, sideways fashion type trading with the dominance of the red candles clearly seen here on the chart. So panic is off the max. Clock is reversing backwards, and the options are not options premiums are not inflated as they used to be within the last couple of weeks. Presents an actual opportunity where you could minimize your cost and increase your profit potential. With that said, interesting point to observe on the calendar of 13 market moves is the fact that even though we got a bearish move Wednesday and a bullish move yesterday, they had one common characteristic, and it is a strong spike, which is a clear behavior of a move 8 early in the day, literally shortly after the market opens, right? Now, last time we had this type of situation, guys, was on August 13th after the market dropped substantially on the day following this type of circumstance of events in 13 market moves. With that said, we're expecting an 11 pyramid based off the pop that's going to happen intraday. Overall, it's going to be a move 3. So 311 is the way we should be trading today. March 26th, Thursday, yesterday, guys, was a move 1 with a clear behavior of a move 8. Notably, magnitude of the move narrows to the downside and it expands to the upside. At this point, the magnitude of the move to the upside has been extended so much over the course of the last 5 trading days that at this point, we could see a rather sharp reversal lower. This is how this move 8 behavior looks. So solid move higher. This is the characteristic of a move 8 shortly after the market opens. This one actually started, it would have been a move 8 instead of a move 1 if this reversal happened maybe right after the market opened. But because we were negative going into the market open, we opened slightly positive and moved higher pretty much without any meaningful pullbacks is what makes it a move 1 with a clear behavior of a move 8. 2-day sequence is 6-1. So definite 8 behavior, guys, as you will observe in this 2-day 2-minute chart is this. Look at the above green dots right here. They take place right between 9 and 10 a.m. So 9:30, 9:45, this is where this huge move comes in. Yesterday started a little bit earlier, carried its momentum into the open. So the bigger part of the move right here, higher, comes right between 9:30 and 10 a.m. So that's a behavior of a move 8. Behavior of a move 8. We have it back to back. The importance of that, it typically results into a big drop on the 3rd day. 5-day sequence, 2, 11, 7, 6, 1 with the behavior of an 8. Guys, this is what we think could easily take place. This is a 5-day sequence showing you clearly what took place last Friday. We think repeat of last Friday is possible going into this white circle that has not taken place yet. So basically, expect something that's going to resemble this move right here is going to be parallel today on March 27, 2020. Now, highly bullish pattern developing on the VIX pre-market, guys, and VIX is likely to resume the uptrend. VIX, despite the market moving like crazy higher yesterday, has failed to even drop below 58. So it just dipped briefly under 60 and then closed at the highest of the day, even though these numbers represent a lower close than the prior day. But this trend that began at 58, dropping to 57, finishing strongly at the highest node of the day on VIX, actually telling us a different story, especially when we combine it with the pre-market action. We have a situation of a bullish reversal formation here. You can call it a reverse head and shoulder. You can call it the last exhaustion gap lower, which was created in the VIX, followed by a gap up higher pre-market. Typically, this type of event lead to multiple days higher in the underlying chart of whatever it is that is on the chart, whether it be VIX or individual stock or something like that. So VIX, to help you visualize this a little bit better, has been dropping all the way from 85, gap down, gap down, gap down, gap down, gap down. At some point, the number of these gap downs reaches a max. Okay, I think this was the final gap down yesterday, and today we're gapping up higher. This could create a situation where VIX could easily revisit the level of 75, 80, possibly 85 near term over the course of the next 2 weeks. So basically, the key point here, despite of the 20% rally, VIX refuses to surrender these already historically very, very inflated high levels. So basically, with that said, guys, you want to short any bounces in the market. Trade like a rock star. I'll catch you on the next trade soon. Let's trade.